Today is Monday, December 2nd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Alan Bush, ADMI Senior Financial Economist, and Mark Bowman, ADMI Senior Global Market Analyst. Starting with the financials this morning, Alan, what is the U.S. economic outlook compared to elsewhere in the world? And what are the implications for the financial futures markets?
Okay, so it is likely that the U.S. economy will hold up better than elsewhere in the world, especially compared to the Eurozone. We are likely to see stock index futures advancing in this environment if the economy here does continue to improve and improve better than expected. So that should be supportive to stock index futures. And I think the entire complex will probably trend higher. Also, we have the U.S. dollar index substantially higher today, recouping some of the losses that were suffered last week. So with that in mind, the dollar will probably continue to advance. And I don't think we've seen the highs for the move yet, as interest rate differential expectations remain favorable to the dollar index. And it is still likely that the Fed will be lowering its key rate at the December 18 meeting, but probably going into next year, the Fed will be, I think, relatively slow to ease credit conditions, and I think that is a recipe for a higher dollar index. So from here, I would expect stronger prices for the dollar, lower prices for the European currencies, especially the euro currency. And in the interest rate futures markets, a Fed that is slower to revert to accommodation suggests that the interest rate futures markets will at least hold steady.
And now, looking at the precious metals markets, what's the current outlook on the gold and silver futures?
Okay, so gold futures are likely to trend higher due to the ongoing flight to quality flow of funds that we have seen, not just over the last couple of months, but even longer term. So with that in mind, the gold will probably continue to advance. However, higher prices are facing somewhat of a headwind, with the Fed likely to be less accommodative. But on balance, the fundamentals still seem to be bullish for the gold market. I think a bit of a different story for silver, which has more of a industrial component. So the silver will probably have trouble advancing, but gold will, I think, continue to gain on silver. So I think gold is the long that traders need to be in, since the trend is higher, but it may be a bit of a less steep advance.
And Alan, what major economic reports and Federal Reserve speakers are scheduled for this week?
Okay, so on Wednesday, we'll have Fed Chair Powell speaking. And on Friday, we'll have the employment situation with non-farm payrolls anticipated to be up 200,000. Those are the main reports.
Thank you. Mark Bowman, the International Cocoa Organization, released an update on Friday. What did it tell us?
All right, well, this is their fourth quarter update for the 23-24 setup. So there's not yet data on 24-25, which is what we're waiting for with bated breath. They did revise world production higher by about 50,000 tons to 4.382 million. This is down from 5.044 million last year, and this is the lowest in 8 years, hence the big rally this year. Grindings revised a bit higher, which left the net deficit on the year to 478 million tons versus 462 million previously and 64 million for last year. So they was a little bullish, and then it got that deficit even deeper. And this is also the third straight year of deficits and the largest one on record. This ending stocks now 1.3 million tons, which is the lowest since 1987. And the stocks use ratio is 27%, which is the lowest since 1976, when they fell to 19%. And this is actually the lowest going back to at least 1960, which is as far back as the data goes. Like I say, not a lot of surprises. The increase of the deficit is supportive. Primary interest is the condition of the 24-25 crop, which is currently in harvest, and the data on that should be released in for first estimate comes at the end of February.
Cotton, Mark. How is U.S. cotton exports faring?
Well, they've been a little better the last couple of weeks, but not really stellar. Friday's report showed net sales of 324,100 bales for the week ending November 21st, which was down from 334,500 the previous week, but it was still the second highest since January. However, cumulative sales for the marketing year are currently around 6.7 million bales, down from 7.8 million at this time last year. And this is the slowest pace since 2016. Likewise, sales are 63% of the USDA's forecast for the entire marketing year versus a 5-year average of 71% for this point in the season. So we're running behind there. This leaves the door open for revisions lower for the 24-25 forecast by the USDA in upcoming supply-demand reports. And Pakistan has the most commitments for the marketing year at 1.5 million bales, followed by Vietnam at 1.1 million, Turkey at 643,000, China at 641,000, and Mexico at 584,000. So China last year, previous 2 years have been the leading buyer. They're way behind this year. They've had a strong crop, and Brazil has passed the U.S. as the #1 global exporter this year.
Lastly, Mark, what can we expect from the OPEC Plus meeting this week?
Okay, so now it's scheduled for Thursday. It was postponed from Sunday. It was supposed to happen yesterday. They are supposedly discussing another delay to the output increases that were, as of last report, meetings supposed to start in January. These have been planned in the fall, but crude oil prices being as low as they are, they've postponed this increase in the output, or basically reduction in the price and the restrictions. Back in June, the UAE had negotiated an increase of 300,000 barrels per day for 2025, and they could be chomping at the bit. They've been anxious, reportedly, to get going on boosting their output. This first increase was expected to be about 180,000 barrels per day. They're currently, overall, OPEC Plus is holding about 5.86 million barrels per day from output. Chinese demand is the key here. There might be some hope on the horizon because over the weekend we saw some better than expected PMI data, which is probably the first improvement in quite a while.
Thank you both. Remember, the views and opinions expressed here today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.